Welcome back. Well, Reliance Mutual Fund is set to launch its second tranche of the CPSE ETF tomorrow, and it's open for subscription till the 20th of Jan. We're now joined by Feroz Aziz, the Deputy CEO at Anand Rathi Private Wealth, and Hemant Rustagi of Wiseinvest Advisors to take us through what they think of the CPSE ETF and whether you should be applying for that. Remember that it is 10 PSUs together which comprise of the CPSE ETF and has given returns on a CAGR of 17% since the inception versus the Nifty, which is up over 8-odd%. Feroz, thanks very much for joining in. I'm going to start with you and we'll go to Hemant right after that. But what's your sense? Are you going to tell your investors to invest in the CPSE ETF, your clients?
Yes, sir. I think it's a very good opportunity. It's a very good opportunity from a perspective of getting a 5% discount on the most, probably the highest dividend paying stocks, the large ones. So I think it's a big opportunity for the 5% discount and the 4% dividend. And since, unlike the last time, it was being managed by Goldman Sachs, now Reliance has taken it over. So the largest asset management company, or the third largest mutual fund house, is managing it at an expense of 0.06 or 0.08, which is almost 1/20th the cost of any equity fund. So you get that 2% kicker, 2.5%, which is a normal expense of a mutual fund. So you get all these buffers which create a risk cushion for an investor to actually participate in equity and have a 8-10% cushion on the downside. So I think it's a very, very good opportunity from that perspective. Risk reward is favoring, because on day one you're sitting on 5 plus 4 plus the expense ratio, which is 2 clearly. So.
All right, Feroz, so that's your view coming on the same. But let's get in Hemant as well. Hemant, I want to ask you a more basic query. You know, a lot of retailers, they're asking us on Twitter, they're writing to us as well. They're saying, would it be better to go out there, buy the stocks from the open market, the same set of stocks, or would you advise them to go for this ETF?
Well, Nigel, I would say, it's very important for a retail investor to see the suitability. While I fully agree that there are many advantages of investing in this, I mean, nobody can deny that. And the fact that this scheme also qualifies as Rajiv Gandhi Equity Savings Scheme, which means that if you invest in it, you get additional tax benefit on 50,000 rupees, which is 50% of that. But I think from the retail investor's point of view, I think what we need to understand is, if you look at this, the composition of this, even though it's an ETF, okay, it has 10 stocks, the top 4 have almost 72%, 73%. So it's a very concentrated portfolio, even in terms of sector allocation. So my thing is that if you look at positive, yes, there is a discount, you will get loyalty units, all that is fine. Look at suitability, and as you rightly mentioned, if you look at the stocks, I mean, the 5% discount, as we know in the stocks, can just go away in a couple of days. So I think it's important that you look at the suitability. Buying stock, depending on your own portfolio composition, that makes sense. Also, if you look at mutual funds, all the large cap mutual funds and the multi-cap funds, most of these funds will have these stocks already in their portfolios. So it's not that the retail investors do not have exposure to this. So I think, for me, the key factor is looking at the suitability, whether it really suits your risk profile or not.
Okay, whether it suits your risk profile or not. Just want to extend that point, Hemant. What would you recommend to a client if they come and ask you that, should I not just put in money in a PSU MF, or an MF which is just focused on PSUs, or a vehicle like that, so that they have flexibility to change the stocks they hold versus a CPSE ETF? How would you reply to such a query?
I agree. Like I said, the point is that there are 10 stocks, there is a concentrated holding. Okay, I mean, yes, one option is that you're looking at a fund which specifically invests in PSUs. And as I mentioned earlier, if you look at most of the large cap funds and the ones which are multi-cap funds, focusing on large cap to the extent of 65-70%, all these stocks are already a part of those portfolios. So if you're invested in those, you already have exposure to these stocks. Okay, now the point is, when you're taking exposure to this, you need to look at basically how much exposure I already have in these stocks. Right, so I think it's very important to look at overall your portfolio and see that you already have.
If you had to recommend between the two, which one would you do? Irrespective of the risk profile.
Well, I would certainly go for a slightly diversified vehicle. Yeah.
Okay, you would go for something more diversified.
Yeah.
All right, Feroz, your final take. Then you have a bit of a strategy as well that's playing out that you were telling us. You want to explain that to us?
Yeah, absolutely, Nigel. I think there is, for a sophisticated investor especially, if he wants to transform this ETF into a pure risk-free instrument or reduced risk instrument, he can go long on the ETF, by which I mean he can apply for these units. He gets a 5% discount. He gets a 4% dividend, which has been paid in the previous series as well. So you have 9 already. And then if you short the same 10 stocks, like Hemant was saying, it's concentrated across 4 stocks. So logistically, it's easy to short these 4-5 stocks and start collecting a premium across 12 rollovers in a year. If you did that, then you would have about 4.5%. Last 1 year premium on these 4 stocks in the weighted average method is about 4.3%. So I have 5 plus 4 plus 4.3. That's a large corpus. That's almost 13%. And in a year's time, tax will depend on how these stocks move, but at least 13% with negligible risk because you've short the same stock. So this works out to be a wonderful strategy in a falling interest rate scenario.
Just a quick question. Would you recommend this versus a PSU MF to your clients, a diversified fund?
No, I would choose this ETF very clearly because there's arbitrage opportunity.
Okay. All right. Aziz as well as Hemant, thank you very much for joining in and taking us through the CPSE ETF. So bit of diverse views there, but nonetheless, this is going to be something which will see a lot of interest probably starting tomorrow up till the 20th. We'll take a break now, but we're going to be focusing more on the markets once we're back. Stay tuned.